Welcome to PM Express Business Edition. Well, we often think about this subject when maybe we are approaching 60, maybe even above 60. Or the new reforms in the pension industry, maybe you don't have to wait till 60 before you think about pensions. How has COVID impacted the sector? Well, today on PM Express Business Edition, we're looking at the pension industry, managing, regulating the pension industry amidst COVID-19. How are things going to change? When I'm due for my payment, will my provider be able to pay it? Or because of COVID-19, there are problems? How is the regulator ensuring that everything is sound and safe for you and I? Managing pensions amid COVID-19. All these things wrapped up on PM Express Business Edition. We'll take a short break and we'll be right back. Welcome to PM Express Business Edition. It's about pensions, regulations, and COVID-19. And I'm so pleased to have with me the Chief Executive of the National Pensions Regulatory Authority, Mr. Iford Atakofi. I hope I got the name. I always struggle with the name, and I don't know how, whether it's the alliteration or whatever. But how are you doing, sir? I mean, as we speak right now, how are things?
Right.
Personally first, how are you doing?
I'm doing fine. Of course, COVID has had its effect on everybody, personally, in terms of corporate level, globally. So we're all trying to cope. We're all trying to get used to the new ways of doing things because we're not in normal times, but we are all learning to cope. And I think it's been about 8 months since we were hit. So we're all adjusting, and gradually we are individually adjusting as well.
From the regulator's perspective, looking at the books, looking at the numbers, how is the industry doing in terms of pensions?
The industry is doing quite well, I would say. We've been here for 10 years now. And we knew that on the 10th year, people who were caught within the reforms will begin to go on retirement. So we had our preparation in place, last year when we invited all the corporate trustees, those who manage the private pensions and also those who manage the public pensions, to appear before both management and a board of NPRA to give us their plan as to how they are going to effect a decumulation of pension funds when people start going on retirement. So we had all our preparation in place and we were ready to roll. And in January, February, things were beginning to take shape. But of course, we all know what happened in March. And therefore, we've had to take another step with contingency plans to ensure that the system runs. But so far, so good.
Talking about taking another step, I mean, the concern for many is that, does it mean that in terms of the timelines, in terms of compliance, and even assessing the ability of these entities to honor their payments and all the rest, everything is safe?
Yeah.
Or you want to maintain some calmness in the industry, therefore, well, I'll tell the judge everything is okay.
Yeah, of course. You see, pension payments, when they're due, they're due. I mean, it's on your 60th birthday. So if your 60th birthday falls on a Sunday, it has to be on it, of course, the next working day. So COVID or no COVID, when the person reaches their retirement age, they will have to be paid, So in terms of that, we have done as much as possible to meet the deadlines. Of course, we all know that with remote working environments, things would not have gone on the way naturally it would have been, let's say if you retired in 2019 or 2018. So there have been a few delays, but under no circumstance will a worker who has worked for all his entire life be made to suffer simply because of COVID. So payments are being made, albeit with a few delays here and there. But what needs to be done is being done.
Dr. help me out with some education here, because the reason why I'm hammering on this COVID is that there are some workers who've been asked to go home.
Absolutely.
There are some workers who they've reviewed their salaries and all the rest. And this whole pensions thing has to do with meeting or commitment to your claims when they are due and all the rest. So if George was working in a hotel and he's been asked to go home, maybe for the past 3 months or 4 months, he's not making his contributions.
Yeah.
How is that going to impact on George
when
he's due to retirement or early retirement and all the rest, meeting the tier 1, tier 2, tier 3?
Sure. I mean, when the pandemic hit, what the first step we took was to get all the administrators of the pension schemes to bring us their contingency plan. How do you plan to meet payments by contributors? How do you plan to meet benefit payments? How do you plan to set up yourself, whether you're going to set up remotely? Because pension will require sometimes face-to-face. People will come in there and look at their statements. So we needed to let them come up with a contingency plan, which they did in record time. And we also set up email systems which would allow communication. Of course, the whole nation had to shut down over a period of time to allow the government to manage the importation and you know, tracing and testing and stuff like that. So that situation required remote communication between the regulator and the industry. And also one of the things that we did, of course, to give consideration for the fact that we are in this period, was to give them some timelines, because they have to report to us. Regulatory reporting has to be, some of them are on monthly basis, some are on quarterly basis. So at the end of the first quarter in March, for example, some reports needed to come, investment reports and all those things, but we gave them time. We met with the industry, of course, through Zoom communication, which we maintained with them. We gave them time to move to the end of the second quarter, renewal of licenses and all those things. We gave them time, you know, submission of their annual reports. We gave them time. So we have given them space. But of course, one thing that we have never and we will not give time for is the benefit payment. That has to go on within regulation period.
But are you satisfied from the report that you've seen that, depending on my contribution and all the rest, if somebody could be benefiting from even maybe 100 million Ghana cedis and all the rest, are these players, is SNIT in the position to do that? Are these other players in the position, looking at their books right now?
Yeah. Of course, in terms of ability to pay benefits, you know, what happened this year, it did not start a long time ago. Yeah. See, the thing about pensions is that it's small contributions that are made, that are invested, and then, you know, they give you returns. So that had been done. That had been done. So nobody's benefit has been reduced as a result of that. Of course, there are some people in the public sector who, because of data issue, haven't been paid fully. But these are legacy issues which have been from the past, which we are trying to resolve. So those issues are there. But in terms of what you are legitimately entitled to by way of benefit, you have to receive it, and they are receiving it. Of course, we do have some petitions coming in. Either maybe there are gaps in my contribution or what I was expecting, I didn't get that, and those cases are individually investigated and dealt with.
Mr. Takov, let's backtrack a little bit. And then there was first just one institution handling pensions, that was SNIT. And then there were reforms, and now we had three. We had a SNIT, then the private, the private scheme where I could do my own contributions, and then the third one, just an informal one. I mean, how have you seen these reforms so far in terms of this three-tier contributions? And do you think that an Ajua Mansa who is working in the public service will retire at 63 and she'll be a better person? But let's first still backtrack and look at this whole reforms, and i.e. this three-tier contributions. Yeah.
You see, the reforms came in at a time when, as a nation, we felt that that single tier wasn't going to give us enough retirement income security.
SNIT, right? Yeah.
That's a SNIT. And therefore, when the agitation started way back in 2004, the government set up a commission which was chaired by Dr. T. Bediakon of blessed memory, came up with a report, presidential report, which was accepted by the government then. And the beauty of the 3-tier is that, okay, the first tier, which is the basic national social security, must be allowed to operate. It's called the institution. SNIT is in place. It's been in place since 1972 and even way back in 1965 and stuff like that. So let SNIT continue to look at the basic national social security, but that will only provide for your monthly pension. But then in addition to your monthly pension, there should be a lump sum that you will take home. That is work-based. So you and the contributor, you have to pay that mandatorily, which is 5% of your salary. Whereas with the tier 1, your employer will pay 13%. But to make it contributory, you, the employee, will add 0.5% to your employer's one, and that will go to SNIT, and SNIT will give 2.5% to the NHIA to look after our health. So that arrangement gave it like a second opportunity for pension to grow bigger. Of course, and the beauty of it was that SNIT will only have to concentrate on the first tier, and then the second tier will be privately managed, so that there will be freedom in the way it is invested. There will be a say, because it's your own contribution. There will be a say in it. And what is even far more reaching with the reform was that on top of that, you, the individual, can voluntarily, on your own, or with an arrangement with your employer, also top up. If you look at what the law says, it's up to about 35% of your salary which can go into pension tax-free. Of course, 18.5% of it being mandatory, and then the other 16.5%, to the extent that you, the individual, can afford, or with your employer, then you can also contribute to that. So if we were to really get ourselves working and taking full advantage of the entire 35%, people would have been going home laughing all the way to the bank. But of course, the education and sensitization didn't hit right from, because there were so many transitional issues that needed to be sorted out. And therefore, an NPRA, for example, we were supposed to have been set up in 2008. We were set up in 2010 and 2011, and by 2012 we started, registering schemes and licensing trustees and stuff. So we were all late in catching up with this whole process. And I always have a belief that the next 10 years, for me, this is where the reforms will really hit the ground. Unfortunately, some people have been caught within this first phase, and they may not have fully, benefited from the vision of the reforms. But pension is a long-term thing, George. So people who are already in the system, who will be retiring in, say, 5, 6, 7 years of time, they are the ones who are going to fully benefit from the full impact of the reforms. As
a regulator, I know that you go through the numbers of these players, both SNIT and the others as well. And we've often looked at the numbers of some of these players, and we raised a lot of questions. I mean, SNIT, for instance, do you review the investment reports of some of these players? Let's look at first SNIT here.
Absolutely. I mean, if you look at Section 67 of our Act, it says that the investment policy of SNIT, has to be approved by MPRA. Of course, it will have to come from the trustees themselves. So we have an investment policy, and the nature of the social security investment is slightly different from the private pension investments. Okay. So if you look at the social security investment, it's sort of mainly made out of equities or shares, and plans and properties, and also they give some loans to some industries which are all picking up, because they will have to use the money to ensure that the entire nation grows, and also their investment will grow for the benefit of the individual. Yes, they may purchase some government bonds, but it is not of a large quantity. So the SNIT investment is slightly different from the tier 2 investment. The tier 2 investments, if you look at the investment portfolio, it's largely made up of government bonds and T-bills, and then bank deposits or bank securities and stuff like that. So there are differences, but each of them is doing very well. I can tell you here that the private pension fund, as we speak now, the second quarter of 2020 is growing at 18.3 billion Ghana cedis.
This is the total capitalization or worth of capital put together, or what they are due to pay out, or just some clarity on that one.
Asset under management,
okay.
The entire asset that is being managed under the private pensions is 18.3 billion. I mean, this started from zero at 2010 and then grown, exponentially up to this point. Now, SNIT is a very matured scheme. SNIT is a very mature scheme. A lot of people, and remember, for the tier 2, a lot of people, it's only this year they've decided going on retirement. So the payout is beginning this year. But SNIT has been paying out for many, many years. So if you compare the growth of the SNIT fund, with the private pension fund, you would think that maybe the private pension funds are doing better than SNIT. But because SNIT pays out a lot, I mean, SNIT is now in the region of about getting close to about 10 billion. That is where they are now. And it is simply because whatever we contribute is invested. And then because it's a defined benefit scheme, there's a formula that they use in paying out. Whereas with the defined contribution schemes, it is what you put in together with your investment returns that is given to you as a lump sum.
A lot of people have criticized, and I asked this question about the investment policy because a lot of people have criticized SNIT and how they are investing and all the rest. And the fear is that when it's due for payment, there'll be some challenges. Reviewing their books and all the rest, are you okay, or you still think that there are some areas that they need to take a second look at?
See, there's something that we do with Social Security Fund, and it's called an actuarial valuation. It's like when you take your car for an MOT, or you as a person, you go to a hospital to have yourself checked, medically, to see whether you're doing fine. The SNIT scheme from time to time is actually checked to see whether the scheme is doing well. The last time it was checked was in 2014, and the actuaries gave us some advice as a country which we needed to follow. Part of it was that the contribution may not necessarily be enough, so we may need to look at increasing the contribution. They also saw that SNIT was paying out benefits sometimes from their investments, because the thing about the defined benefit scheme is that you as a young man, you contribute, and then the old man who is leaving takes the benefit of your contribution. So it's a pay-as-you-go system. So if new people are not coming in, it becomes difficult in the growth of the fund. And we all know as a country, it got to a point, if you look at the statistics, the contribution was less than the payout. So there was a bit of a difficulty for SNIT.
Interesting issue here that I want some clarification. I mean, from a layman's perspective, so does it mean that people were not growing were not retiring, or people were not contributing to the scheme?
People were retiring. Retirement, as for...
it was due.
Yes.
So then what...
But people coming in, there were less people being hired in the public sector. Over a period of time, there were less people being hired. So the SNIT numbers, instead of growing, was rather reducing, and the payout was getting...
What about the biggest employers? Well, some would say that there have been issues about government's compliance in meeting the timely contributions and payment of the scheme as well. What about government as well?
Again, it is one of the issues. In fact, I didn't actually, finish with the findings of the actuarial evaluation. That was one of the issues, that government indebtedness to the scheme way back there in 2014. But of course, by the time before they do the actuarial evaluation, they would be historical. So there had been some historical debt that government owed to the scheme, and obviously, if that is not paid, it is not going to make the scheme grow. They will not have the funds to invest, and therefore the Social Security Fund will be shrinking. Whereas when somebody becomes due for retirement, whether you have money or not, because you have to pay them out, because SNIT is a social contract. You've signed a contract with me based on the formula that when I retire, you will take my 3 best years and the number of years that I have worked, and then you give me 37.5% of it. So there's a formula. Whether you have money or not, you have to pay me. So for those who are retiring, SNIT is bound. But then SNIT must get the funds coming in order to meet that formula. That is a conundrum that SNIT faces.
To talk of you, I'll be getting back to you on what you make of this actual report and whether it should be implemented. That should the contributions be upped? Should government be more apt with their payment? Or what is the best way forward in dealing with the problem of SNIT? And also, what about the other players? And we'll move on and look at COVID itself and the impact on the industry. This is PM Express Business Edition, managing and regulating the pensions industry in the era of COVID-19. I'm engaging the Chief Executive of the National Pensions Regulatory Authority. We'll take a short break and we will be right back. Welcome back to PM Express Business Edition, regulating the pensions industry amidst COVID-19. How is it going to look like? Are all the players up to that when time is due, they'll be able to pay all their claims to you and I? Or there are some problems as well. What is going to happen to the actual report that was recommended? Are contributions going to go up, and are we prepared for that or not? I'm here with the Chief Executive of the National Pensions Regulatory Authority, Mr. Takofi. And thank you very much, sir. So we're talking about the actual report and the recommendations that are made. One bit that is of interest to me is about whether, going forward, contributions should be increased. What do you make of that one?
Okay. Yes. Ideally, with contributions going up, there will be a lot more to go into the SNIT fund. But these are decisions that cannot be taken by the administrator or the trust itself. We have to have a national conversation. Because at the end of the day, when you talk about contribution, it's the employer and the employee.
Ability to pay?
Ability to pay. Because currently, even with 13% that the employer is paying, we've talked about indebtedness. The biggest employer is government. And we've talked about the indebtedness here. So if the contribution should go up, let's say 19, 20, 21, it means that the proportion,
the current
18 and a half. Yeah, the proportion that the individual or the employer will pay will have to go up. Can we afford to do that? That is where the national conversation needs to take place. There are also issues about even whether retirement age should even be increased. And again, these
other countries are doing it as well. Should we look at that?
So that requires stakeholder, conversation, a national conversation. Also the issue about whether only basic salary should be used in computing pensions or in paying pensions, or allowances should also be added. All these things are issues that need a big conversation. And with networks like yours, George, we would need the mouthpiece like this to bring this issue to the fore, so that the big pension questions can be asked and the answers can be given as a nation, so that we can move forward.
Some would say that maybe the back stops with you as a regulator first. I mean, the recommendations will come to your table. Based on these recommendations, you also make a proposal for the other players to look at. I mean, for you, what are you going to do with them? These are initial proposals. Looking at the fact that you talked about as a social contract, when the time is due, should be paid and all the rest. Then looking at the fact that, listen, we have to have a very sustainable scheme. Should we obviously increase and ensure the government also meets its contribution to this whole scheme?
You see,
maybe 1% is nothing, maybe.
It's a lot. It's a lot. Of course, depending on the quantum of your basic salary, so even 0.5% is a lot. But the National Pensions Act has been operating for 10 years. In 2014, there was a slight amendment reducing those who were within the catchment age from 55 to 50. That was the only thing that the new amendment brought in. But 10 years on, I believe the time has come, and I've been making these submissions along the line when I get the opportunity, either I meet government or I meet the press or in our stakeholder engagement, that let's look at the law again. because the law is a dynamic, document, and pensions are very emotive. It gets to a point where adequacy of pension becomes an issue. Today, what you are receiving may be enough. Tomorrow, it may not be. So it's a dynamic thing that all of us need to engage in. So I believe that we need to have a conversation as to whether the National Pensions Act needs to be amended. And if it needs to be amended, what are the areas that we need to look at?
Do we need the act to be amended before some of these proposals can be considered?
Yes.
One has to do with the increment in the pensions contribution, and also about the age as well.
Yeah, absolutely. Pension is a creature of law. A National Pensions Regulatory Authority, we're a creature of law. SNIT is a creature of law, tier 2, tier 3. So before you can make any changes, the law itself will need to be looked at again. Yes, so the amendment is necessary. The conversation needs to start.
I have seen, and even within my granny came on retirement, and she went into consultancy.
Yeah.
We've had a lot of people who have retired, and they are still working.
Yeah.
Isn't this a justification for us to take a second look at the pension age again? I mean, in other developed markets, they've looked at that and they've pushed it forward. Isn't the time right that if it's 60, maybe 65 might be okay? Because most people who come on pension, they still go into consultancy to work minimum of 5 years and even 10 years.
Absolutely. I mean, in Europe, in a lot of countries within the European Union have revised their pension ages, and in UK it's almost like every year they revise it because the women live longer. So the women, I think they are retiring now. Some of them, and it has to be from a certain age. You see, you cannot just do a blanket increase in the pension age. So they will say people who are born in, say, 1960 will retire at age 62. Those who are born in 1957 or 63 will retire at, so it's phased. So when we are having a conversation, it's not just all of a sudden everybody is going to retire at 64 or 65 or 66, but it is phased. So those who are born at a certain age will retire at a certain age, and then those who are born later will retire at a certain age, and then gradually we will have that increase in retiring age. That is how it was done in Europe and in the UK. I mentioned UK separately because they have come out of the European Union. So that is how it was done. And I think that as a nation we need to look at that, because there are people who have a lot of experience at age 60 and then they leave. And then also hiring people to come on board is also not commensurate with the rate at which people are leaving. So if you train somebody to be an expert in an area, and the person can give a lot more at 60, and you ask them to go home, yes, like you're saying, they will go into some consultancy, and they may even come back to the same business and
consult for that same business at a higher cost.
Cost.
Let's look at the pensions too, and contributions, and there have been instances where issue has come up in court and all the rest. What has been the compliance level with some of these companies in meeting and making the deductions and giving to these private operators that have been appointed to manage the scheme? It's been an issue in the past, even with SNIT. What about it now?
Compliance is a very, very important aspect of our job as regulators, because our key mandate is to ensure compliance with the Act. When you are a scheme and then you come for registration, when you're a trustee and then you come for licensing, every year, every quarter, every month, there are certain reports that you have to file with the regulator. Sometimes some don't come in, sometimes they come in late. The only powers that we have are powers of sanction. We will fine you, and just lately, 2019, late 2018 and late 2019, we were given, that's MPRA, we were given the power to prosecute. So that has actually...
Are you doing that?
Yeah, we are doing that.
Have you prosecuted anyone?
Well, before you take somebody to court, you have to go through a certain...
I know you're a lawyer.
Yeah.
Have you done that?
We haven't taken anybody to court yet, but what we have done is even more effective than taking people to court, because once my lawyers hit you with a notice of intention to prosecute, they're paying like crazy. I mean, the figures that are coming in is staggering. Now that they know that the prosecutor has a whip in their hand suddenly the level of compliance has raised. You know, my interest is to get the money. I don't want to put people, you know, into jail, whereas the contributor's money may be locked in there. My first and foremost interest as a regulator is to get the money together with the penalty of 3%, and that is coming in like crazy. But those who are recalcitrant, George, you'll be hearing from us very soon.
Let's move to the third bit, which I know is of so much interest to you, about the informal sector. How is it working at all? Something that you still have to go out there and educate people to see the importance of it, how it should be working. How is the Tier 3 doing? And what is the regulation doing about that one?
It could do better. The beauty of our law, if you look at...
Is it actually working?
It is working, but the rate at which it should work, I will have to admit here that we could do better. Because if you look at the framers of the law in section 108 and 109, made clear provision that voluntary contribution by self-employed people, even those who are in employment who want to go into Tier 3 voluntary contribution, can do that. And even says even the armed forces who are by law excluded from paying pensions, when it comes to Tier 3, they can even go into it. You know, but right now we have only about 19 schemes. You know, it should be more, because we have a number of informal sector organizations that have, you know, put themselves together, or even individuals. We as an authority have put in place what we call a micro pension policy. And if you look at the word micro, it means a small scale personal pension schemes, group personal pension schemes, or provident fund, and anybody who wants to contribute. The sums are not defined, they are not mandatory. You can pay 2 cedis today, 5 cedis, 10 cedis, what you can afford. And it is these small amounts that are invested that will give you the returns and give you the retirement income security. The take-up has been quite slow. If you look at as a country where about 85% of us are in the informal sector, you would have expected that private pension in the informal sector would be the biggest. Sadly, we haven't been there. And if you look at the structure of our society from the study that has been made, 60% of households who are in the informal sector use mobile money. And you go to countries like Kenya, mobile money is the impetus for driving informal sector pensions. So we are in talks with MTN. We want to bring together what we call a switch system, which will capture everybody into a module. And because you see, what makes sometimes the informal sector pension difficult to operate is the time to go and get an individual. George, what is your name? What is your date of birth? Where do you work? Your mother's name. And people don't have time for that. Whereas in employment, all this data is captured. So running an employment scheme in a formal sector is far more easy than running it in the informal sector. But of course, now we have the NIA. The nation is moving towards digitization. So all our data is being captured. And that digitization is the key to getting our, what we call KYC, know your customer. All the data is captured. So if anybody wants to sign on to a pension scheme, we only need to tap into like an API with NIA, and we get all your data. So we don't waste your time coming to take your name, your date of birth, which people don't have time, you know, to provide.
But sir, looking at the challenges that we are having with Tier 1 and Tier 2, you really think that we really needed this third tier as well? Because capturing of data is difficult, even convincing those who are in the informal space. I mean, that person is looking at how I can get food on my table. It's more of a pay-as-you-go person. Go to the market, make money, the little money that person has. And you're talking about pensions, which is a remote thing. If I die, my family will bury me.
George, let me tell you the beauty of the law about informal sector pension. Your contribution is actually divided into two. We have a personal, the savings part, and then the pensions part. It depends on the scheme. You know, it can be 75-25. 75 is towards your long-term pension. You don't touch it until you retire. 25%, you can access it within a short period of time. So in a way, the beauty is that it's forcing us to save, and that money you can have access to it. It is better than putting it into Ponzi schemes, putting it into short-term investments that go. I mean, we are here in a country where we've heard about the DKMs and all those things. That a lot of people put their their investments into. But you have never ever heard or seen a situation where a pension scheme has gone down. So that form of investment is far more reaching, far better than going to put it in these short-term Ponzi schemes, which here today, gone tomorrow.
Let's come back to one of the biggest elephant that is always in the room that we have to deal with: government honoring their payment and even sometimes going in to borrow from SNIT as well. How are you engaging government as a regulator to ensure that they honor their payments and they don't go out borrowing from SNIT? That puts some pressure on the scheme.
Yes, we engage government a lot. I mean, currently with the indebtedness that government, and of course, when I say government is of a permanent succession. So,
okay, continue.
You know, whichever government, right from Nkrumah's time, if Nkrumah's government owed SNIT, the current administration will have to
that could have been paid by now or been met by now.
No, I'm only explaining the permanent succession. So whichever government owed, the current administration takes that responsibility. So what the current administration is doing is that, okay, all the legacy debt, we're going to issue bonds so that it will be like the government has taken on the debt, and at the end of every quarter, they will give you some payment, you know, like what we refer to as coupons, so that the debt would have been absorbed by government.
Sorry to backtrack a little bit. What is the position now in terms of, I've seen some of the numbers in the budget, but what's the position now in terms of government indebtedness to SNIT? Maybe, let's say even end of 2019, even if that will be, or maybe first quarter of 2020.
The thing about indebtedness is that because there's a 3% penalty attached to it, it keeps changing.
Okay.
So if I give
round figure, not even ending 2019, what was the position in terms of the indebtedness? That any round figure, not that exact numbers. And because you talked about a bond being issued, what numbers are we working with that these bonds are supposed to be clearing?
I mean, at some point in time, it was about 2 billion. And that government has owed
maybe
SNIT.
End of last year, or maybe okay. And so you're explaining to me about the bond being issued.
The bond being issued to pay off that government indebtedness. So and that is the only way that SNIT can bring that onto their books and then add that onto their assets that is being that's the Social Security Fund. So I think and you asked about whether we engage government on that, and it is through the engagement that the regulator and then the stakeholder, and of course SNIT, my board, have with the government. That's why this legacy debt is now being paid.
And are they showing good faith?
They are showing good faith, yes. Government has always shown good faith.
What about the issue of, I mean, I asked the question about SNIT, and also they go out borrowing from SNIT because it has implications on the sustenance of the scheme as well. I mean, is it bad, or is there been instances where we've heard that government had to borrow from SNIT as well? Has it gotten to your table, or
no, not really. I mean, certainly not since my time as a regulator. No, I mean it doesn't happen. Government may owe SNIT, but government borrowing from SNIT, that's a new thing. No, it doesn't happen that way.
I'll be getting back into the COVID issues proper and going ahead with regulations, the current status of all the players and all the rest, and going forward, how are we going to take the industry forward to ensure that in other markets, pension players own banks, they own the financial industry. It looks like it's the other way around. I'll be getting more details on what this is. A PM Express Business Edition, so looking at regulating the pensions industry amid COVID-19. What will be the way forward? Take a short break. We will be right back. Welcome to PM Express Business Edition, as we focus on the pensions industry and how COVID might change things or not. And we have the Chief Executive of the Pensions Regulatory Authority. So let's look at COVID and how things are going to change in terms of capitalizations and all the rest. Are you reviewing anything because of how COVID has impacted, or COVID may impact, the shareholders, investment issues and all the rest? Looking at those reports that are at your table, can you say that the industry is safe, everything is okay, and if it's due for payment, no player will say that I delayed in calling a bond issued by my shareholder because of COVID and all those things?
Yeah. Of course, COVID has had a global impact on investments, and Ghana is no exception. So obviously, the rate at which some investment vehicles may grow will be affected, but it's early days yet, and therefore we don't know the long-term effect. But yes, there may be some impact. Of course, we know that since COVID hit, a number of people have lost their job. Our government has come in to amend the Income Tax Act that allows people to have access to some of the contributions they have made by way of Provident Fund. They would have normally paid 15% tax to government. Government says, no, keep the 15% tax. Those who have been permanently affected, lost their job due to COVID. And those who have the private personal pension schemes who want to take their monies or withdraw or draw down their monies, government says any tax that would have been due, take it. So that impact has been lessened by government magnanimity and also by a passing of the income tax amendment law. And also the fact that stimulus packages have been given to employers, and these stimulus packages are being used to hedge up some of the payments that they couldn't have made during the time of COVID. So that is also helping so that any gap that would have been created by way of defaults are now being breached. So that is there. So indeed, those are some of the impacts, and also the way we do business. A lot of remote way of doing business rather than the face-to-face way of doing that. So that also, so our style and our ways of working have been changed. Our communication with the industry has changed, and I said a lot of virtual contacts are made. Inspections, for example, that we have to make sure that all the report that they give us are actually what is on the ground. All those things sometimes are done virtually. So yes, COVID has had its impact on the industry, but in terms of losses, we are yet to see the impact fully, but gradually. Or as at now, anybody who is due for retirement has not had their benefits affected.
It means I'll get my benefit if I should sign up today. If I'm entitled to maybe about maybe 100,000 Ghana cedis. I'll be paid.
Because you see, investment is a long-term thing. You know, when you put sums of money into an investment, it will take a long time to yield. So if the returns are going to reduce, it will have to be like, you know, sometimes even in a year's time and stuff like that. So far, it's been good.
Has COVID forced you to freeze any regulatory action, if there was any, that you were going to do this year? Capitalization, investment policies, and all the rest?
At all. What COVID has done is that it has slowed the process. There have been...
Like what, if you can just refresh our minds, anything that you are planning to introduce in the industry?
Well, no, what I'm trying to say is that the reporting regulations, the timelines have been extended, but we...
By 3 months, 4 months, a year?
No, not a year. I mean, end of first quarter now becomes end of second quarter, for example. So things which should have come to us in March now coming to us in July, end of June, July, and stuff like that. So renewal, right now, we are in a renewal season, whereas we should have ended it. You know, those who are renewing their licenses, and so that would now go into October. So those are the things that I'm talking about, that we've given some kind of time, you know, frame for people to adjust. But in terms of cutting corners or not doing what we are required by law to do, no, we haven't done that.
We are talking about investment, and the question I want to ask is that how has the recent cleanup in the banking sector, savings and loans and all the rest, affected any of these players who are holding investment in these firms?
George, the beauty about pension funds is that, you see, we have three players, and of course the regulator comes in at the fourth player. The first player is a trustee. The trustee is the one who has a contract with the contributor, but he does not even see the money. The money And then we have the fund manager. The fund manager advises the trustee that, oh, this investment is really good. There's an investment vehicle, maybe MTN is floating shares, or let's say there's a government bond here, or let's say this this corporate institution, you know, is raising some bonds. So they will advise the trustee that this is good. Let's go for it. We've studied the market. This is good. That is their role. Also, they don't see the money. They only advise on that. And then we have the bank, which is the custodians. Now, the custodians only take the contributions that the employer puts in there. And then when the custodian takes the money, upon the advice that the fund manager has given to the trustee, the money goes into investment. So none of the players, including even the regulator, has their hand on the money. So even if a trustee goes down, or a fund manager goes down, or a bank goes down, the pension funds are safe. And if you look at Section 207 of our Act, it clearly states that even if a bank goes down and the bank is a custodian, pension funds are the first to come out. So we have banks that, you know, went down during the cleanup. We have fund managers that have had their licenses revoked, but at no point in time has pension funds been affected.
Interesting.
Yeah.
So if it's due, my benefits are due. I won't have any of the players telling me that, George, your money was locked up in bank A, and I'm still waiting for the receiver to give me my money. Because the governor of the Bank of Ghana said that over 11 billion, just recovered about 2 billion Ghana cedis.
Yeah.
So everything is safe.
Everything, you know, a lot of banks have gone down. Unibank, for example, you know, they were custodians. But you never heard that, you know, when they went down with pension funds. They may have gone down with some investments, some short-term investments that people have placed with them, but pension funds were safe. So that is the beauty of the law. And I think also that is the difference, that pension contribution and pension investment, the difference between that and short-term investment and other things that take place. Yes. So
apart from the laws, I mean, going forward, what are some of the reforms that you think that we need to propose from the regulator's perspective? Not long-term, medium, short-term. Maybe now that the economy is picking up, everything will stabilize, all other things being equal. By first quarter, we might be back. The governor of the Bank of Ghana is proposing about 2.2% growth for this year. That might be good compared to our peers. When should some of these reforms that you might be considering will be kicked in for the sector? Yes,
thank you, George. I mean, even right now, we are looking at investment guidelines. Because you see, there are better.
Don't we have one?
We do. We're a reform of the investment guideline. We are amending our investment guideline to take advantage of, let's say, investment in property. Because people who are pension contributors need homes. As a country, we have a shortage of homes, and the law says that we can use our contribution towards acquiring mortgages. And this is something that has not, fully been taken up, and our investment guideline has not really responded to that area. So we are now revising our investment guideline to take advantage of that, so that people can use their pension contribution as a collateral, down payment for acquiring, the law says, primary accommodation, not for investment, but for your own accommodation. So that by the time workers retire at the age of 60, they would have a resting place. And even whilst they are working, they can have a
Recently during COVID, there were proposals from some of the workers' unions about them having access to their SNIT contribution. I mean, how feasible is that? Yeah. Is it something that will be considered in your plan reform that you're looking at?
Yeah. See, I'll be blunt to say that that's not feasible.
Why?
Because you talked about SNIT. Yes, you can have access to some of your pensions. For example, when you're age 50, and you've been laid off, you can have access to your tier 2. The tier 3, I just talked about the amendment of the income tax act, allowing people to have access, and people are having access. They're drawing down without paying any taxes. So yes, so tier 2 and tier 3, you can, because that is a lump sum. Now, SNIT is what gives you your retirement income security in the terms of every month that pays you for the rest of the time that you're left before God calls you. And therefore, if you allow people to have access to that, then what you are going to create is retirement income poverty, because that is the amount that you will get every month. So the structure of the Social Security is different from the structure of a defined contribution pension. Defined contribution pension, yes, in times of difficulty, you can have access to it. That's why I said that with the personal pension scheme, it is divided into two parts. We have the personal savings, then you have the retirement. So you can have access to it, you know, as and when it falls due. So the actuaries will explain to you.
The actuaries can take 1% of that one. I mean, that is the essence of why do I have money locked aside in the name of investment when I'm dying now? I cannot even benefit from my pension scheme.
And that's the beauty of the three-tier pension. That's the beauty of the three-tier pension. You see, so there is always a fallback on the tier 2 and the tier 3. Whilst the tier 1 looks after your number 1 when you are older, when there's no plan B, when you cannot work, when you are less productive, then that takes care of it. That's why it's called social security.
Let's look at, as you wrap up, some of the, again, you were highlighting some of the reforms that you are planning to put in place, apart from the investment laws as well. What other new things are we looking at going forward to make the industry strong, safe and sound?
There are a number of reforms that, you know, we're looking at, and I mean currently the reason why I don't want to preempt it is that the thing about pension is you have a number of stakeholders
that you have to engage.
That you have to engage before you come up. So as a regulator, you put things to the fore, and then the stakeholder will say, no, this one, no, you want it here, you want it there, and then it comes together before you can come out openly and talk about some of the reforms.
So I appreciate your time so much. We have to draw the curtain down. Time is not our best friend as of now, but from your submissions, it appears that things are safe and sound for us. I'll just be waiting for that person who goes to the company SNIT and says that my pension 100,000 is due and maybe the company is struggling. I'll get back to you as a regulator. Well, also we have to draw the curtain down on PM Express Business Edition as we look at regulating the pensions industry. Going forward, it appears things are safe and sound. But Mr. Takov, if somebody wants to get in touch with you in terms of several complaints, I mean, let's look at even the email here. How can I get my concerns to you? Because it's been a bigger problem. Us as media persons, people call us that I have a problem with this, I have a problem with that one.
Yeah, you can reach us on our email, info@npra.gov.gh. That's government.ghana. So info@npra.gov.gh.
Very responsive as well. If I send the mail today, I'll get a response.
Yes. And then also, if you want to reach us on our toll-free line, it's a 0800 766 000. And we also have a landline, which is 0302 968 693 or 692. Each of them.
I'm going to test the system. Also, we have to draw the curtain down. It's PM Express Business Edition, regulating the pensions industry amid COVID-19. It appears things are safe and sound. Well, time will tell. My name is George Jaffe. Have a great day.